We're about an hour into the U.S. trading session, and markets are trying to find their footing after a fresh dose of Fed speak and some big sector rotation stories. I'm Grant Mercer. This is Storm Stock Solutions, and let's bring a little clarity to the chaos in this morning's tape. The new wrinkle this hour comes from the Federal Reserve. According to reporting from MarketWatch, Fed Governor Christopher Waller, who's reportedly a finalist to replace Jerome Powell, said he expects inflation to start falling again over the next 3 to 4 months and sees room for roughly 100 basis points of rate cuts at a moderate pace. That's a meaningful shift in tone. It keeps the cuts are coming narrative alive, but it also tells traders not to expect a slash-and-burn easing cycle. The immediate focus in the next leg of trading will be how the front end of the Treasury curve responds, and whether rat-sensitive pockets like housing and small caps lean into this or fade it. On the opportunity side, the standout story continues to be precious metals. MarketWatch highlights strategist Albert Edwards asking whether gold's roughly 60% rally this year is just the appetizer for a light 1970s-style main course. When you pair that kind of move with today's softer for-longer Fed chatter, you can see why traders are crowding into gold and silver as a hedge against policy missteps, sticky inflation, or both. Those metals and the miners tied to them are very much in the areas of strength column this morning. You're also seeing the rate narrative bleed into the real economy conversation. A piece from MarketWatch this morning captures the mood with the line, "We all have economic jitters," framing the question of whether it's smart to buy a $600,000 house after recent Fed cuts. That's the lens a lot of investors are using. If Waller's right and we get measured cuts against a jittery job market, housing-related names and consumer lenders are likely to be active as traders handicap how much demand a lower rate environment can really unlock. On the flip side, energy remains an area to handle with care. MarketWatch notes that 2025 is shaping up as a historic year for oil, with crude prices drifting toward a 5-year low, because the world simply has more oil than it needs right now. That oversupply backdrop is why you're seeing pressure on parts of the energy complex, even as other strategists, also cited by MarketWatch, argue that in an inflationary setting, energy stocks are the new bonds. The tug-of-war between that longer-term narrative and today's very real oversupply is a key fault line in the market, and something pros are watching closely. Under the radar, there are a couple of stories that could matter more if they start to intersect with the tape. One is healthcare and public health costs. MarketWatch reports that each measles case is estimated to cost at least $16,200 to the U.S. healthcare system as outbreaks rise. It's not moving the major indices by itself, but it's the kind of pressure point that can influence sentiment around insurers, hospital systems, and public health policy if headlines escalate. Another background theme is personal finance behavior in a lower rate world. You've got stories running about parents questioning how much to support adult children, and 401k participants being nudged toward annuities in their 50s. None of that is a ticker-specific catalyst, but it does hint at how households may shift risk, income, and savings preferences as the Fed gradually moves down the rate path Waller outlined. Looking into the next hour, I'll be watching 3 things: whether Waller's comments push bond yields decisively in one direction or just add to the chop, if the precious metals bid keeps building or starts to look overextended intraday, and how hot energy names trade against the backdrop of oil flirting with multi-year lows. We'll also keep an eye on any headlines around mega-cap tech and AI, with MarketWatch flagging a reported $10 billion open-A deal in the works for Amazon. That's the kind of story that can flip sentiment in the big tech cohort quickly if it develops. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady!